The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success. You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow.
Months.
Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 4th. Terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody had a great evening out there. Let's go take a look at one of our tools. This is the tool I call Defeat Isn't Bitter If You Don't Swallow It. You know, at one point or another in our lives, each of us have experienced failure. And the more often we're willing to risk trying a new approach or a fresh concept, well, the more likely we may experience failure, at least in the short run. And that's the key, folks, only in the short run. You see, it isn't easy to succeed when we first try something new or ambitious, and if we're afraid to fail, well, we may be hesitant to take risks. Yet, if we never dare to step forward, then we stop growing. And if we're not growing, we're what? That's right, we're dying. Growth requires our willingness to risk failure and to accept defeat. Let's link the known to the unknown, since that is the easiest way to learn anything. If you want to teach somebody something, always focus on linking the known to the unknown. So if as toddlers, you and I, if we were afraid of failure, few of us would have learned to walk. To learn to walk, we had to be willing to fall down and at times scrape our knees and even bruise our shins. You know, it was Confucius who said, our greatest glory is not in never falling, but in rising every time we fall. Rising every time we fall. To be successful, to become victorious, we must be willing to risk failure. But the important lesson to learn is failure is not defeat unless we let it be. Everyone can improve, regardless of their situation, regardless of life's circumstances. You and I, we do have the power to accomplish that which we make up our mind to accomplish. You know, in the process of inventing the electric light bulb, here's another way to link the known to the unknown. It was Thomas Edison. He tried and failed over 1,000 times. Edison was asked if he grew discouraged by all of his failures and whether or not he considered giving up. He replied, those steps on the way, and in each attempt, I was successful in finding a way not to create a light bulb. Oh, what a mindset. That's the mindset you and I need. You know, and he went on to say, I was always eager to learn, even from my mistakes. Folks, let us always remember that defeat isn't bitter if you don't swallow it. Well, let's go check out. There's no defeat in the marketplace here right now. We've got Dow futures. Well, there may be a little bit in Goldilocks and silver, but Dow futures are up 167 points, trade out at 16,315. S&P futures are up 18 points, trade at 1861. NASDAQ futures up 39 points, they're trading at 3707. In the currency market, really, it's a hard currency market that's got the biggest movement. Goldilocks back $17, trading at $13.33. Silver is off 40 cents, trading out at $21.09. Light sweet crude back $1.13. It's trading at $103.79. Natural gas is up 14 pennies right now. It's up 3% here this morning. Our call number, 877-927-6648. If you give us a call, be happy to field your question. Take a look at your stock chart. Do whatever I can to assist you. A quick peek around the globe here this morning. Over in the UK, the FTSE's up 97 points, about 1 4/10%. The DAX making back most so far, maybe even more than its total losses yesterday. We'll take a look at that chart. It's up 200 points right now, up 2%. We got the Nikkei. It closed up 69 bucks, up about 0.5%. The Hang Seng up 0.7%. It was up 156, and the Shanghai really unchanged, down 4 points. So where do we begin our day? Hey, let's go take a look at what should we take a look at? Let's go take a look at first. Yesterday we were talking about the ES Mini. What we showed here. Let's do this on the shorter term time frame. Then we'll go ahead and we'll step it up to the larger term time frames. Let's do that. So when we were on the air yesterday, one of the things that we noticed, if you're with us certainly during the first 2 hours of the show out here, one of the things that we noticed was we had a consolidating pattern here at the bottom. This was after the gap down on Sunday evening, of course, as a result of Russian troops moving into the Ukraine, into Crimea, and we saw the market really consolidate. It pushed lower at about 12 noon. 12 noon yesterday was the first push lower that we saw was about 7 o'clock. Then we saw it try to push and break out to the highs during the 10 o'clock show. It failed to do that between 10 and 10:30. Then what it did, when you can't bust it out on the consolidation of the upside, what are you going to do? It goes ahead and it tries to bust it to the downside. 12 o'clock, it just pierced that level. In fact, we actually saw a move here at 12:30. Now, this is a 30-minute chart, and these consolidating patterns, you've got to really wait for the actual candle to form, or you've got to go down to a shorter-term chart in order to be able to trade it. You can see that price was able to spring back, get up inside the consolidation, even though there was a lower low that was made at 12:30. Where really the body of the candle is truly the essence of price out here. In this case, what we identified was we said, hey, this is going to break at 10 points or more, whichever way the market breaks. And that's what we have seen thus far. If we take a look at the measurement here, if I just simply go ahead and put in this consolidating pattern out here, that consolidating pattern, you can see that the break top side has been more than 10 points. 10 points would have taken us to about the 1860 level. Instead, what we have seen is a 100% move of a move. At 7:30 this morning, the ES Mini getting back to the 1865.75 level. What do I mean by a move of a move? Very simple. When we take a look at a stock chart, we're just really trying to identify major intersections. You know, if you're listening on the radio or your mobile phone at TFNN.mobi, you're probably driving. Or you may be driving, and you're going to be facing intersections today. And when you make a change in direction on a stock chart, it becomes a major intersection. Those are the swing points that we're looking at. In this case here, we're looking at the time frame from Friday at about 12 noon when the ES Mini got up to 1866.50. You don't have to get all the way up exactly to test that level. Now, you like to see that, but 100% move of a move is really within inside the range of that swing point. So we have seen that thus far. That doesn't mean that the move is over, but oftentimes when you do a 100% move of a move, you're going to do something. You're going to consolidate sideways. And, of course, as we take a look at the ES Mini, nice wide-ranging bar. We had really two wide-ranging bars, one coming off of about the 1:30 a.m. time frame, so between 1 and 1:30. I believe that was when the news that the troops were going to be pulled back for the time being out here. And then I believe you had Putin come on the air about 6 o'clock this morning out here between 5:30 and 6 o'clock this morning. And the market continued its move higher back up to that swing point from last Friday out here. Now what we can also see on a 30-minute chart here as price had gotten into the oversold, overbought condition, I should say. And so right now all it's doing is really working its way off here. In order to get some kind of reversal, you really need to see it close below this wide-ranging bar out here, and that's a 6 a.m. low of 18.55. Right now you're trading at 18.60 out here. So that's what's going on the 30-minute chart out here, and there's where we can take a look at a consolidating pattern. It works time and time again. You just need to watch and see which way we had a break. Now, you really had a break of that consolidating pattern. That took place at 1 o'clock in the morning. So on a 30-minute chart, by 1 o'clock, you actually saw a break of that consolidation area. Now, let's go take a look at a daily chart and see what we've got going on in the daily chart. Let's put the Rhodes momentum indicators up on the screen here. Let's take a look at the ES Mini daily chart. We can see that yesterday's move here as we gap down, really Sunday evening's gap down through yesterday's close. What it really formed out here was a reversal candle, an evening star, a three-river evening star, and that says that the high of Friday's session now is the resistance area. That resistance, again, inside the ES Mini on the daily chart, that is at 1860-650. If you clear a resistance level, in this case here, you're at all-time highs. If you clear that, that's resistance. That old resistance really should become new support out there, and that truly would be considered, on a daily chart, would be considered a breakaway. There's really, other than that candle signal out here, other than the evening star, there is no other bearish pattern that I can see out here inside of the ES Mini, at least not at this stage. So the key here on the 30-minute chart, the key on the daily chart is really going to be 1866.50 out there, and that is on the ES Mini. We take a look at let's go take a look at the Dow. We'll look at the Dow futures. We'll take a look at the daily chart here. We'll see what kind of patterns they presented themselves with yesterday. And really, you've got the same pattern. Let me go ahead and I'll explode that up just a bit out here. We can see on the Dow, each time that it's made this push up into these levels, this 16,300-ish range, we've seen. In fact, this is the second evening star that we have seen. The first one took place. Let me get my crosshair out here. It makes it a little bit easier for me to identify the date. So the first one that we're looking at actually confirmed on February 19th. That says that the high, looks like the high might be the February 19th high. That was your resistance level. That was at 16,201. We saw the market actually crack above that on Thursday last week. It not only cracked above that evening star, it cracked above a real small bearish engulfing. Excuse me. Gotta hate when that dust flies right into your mouth, right into your throat. In any event, that's now swallowed and down the hatch. So what I was saying is we had resistance at that evening star. We had resistance at a very small bearish engulfing candle that had formed here on February 26th. Now, in the case of the Dow, it's got to deal with the high here from Friday. That is the resistance level, that high being 16,388. That's what's going on inside the Dow. When we get back, we'll take a look at the daily chart for the NASDAQ futures. We'll go take a look at what's going on inside of Goldilocks, silver, light sweet crude, and anything else you'd like. Just give us a call. We'll be right back, folks.
Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. We left off. We were just about to take a look at the NASDAQ futures because that is the king. That is the strong index out here. And, you know, when I'm reviewing these reversal candles with you, when I mentioned candlesticks like bearish engulfing or evening stars, you know, what they are, it's a way of the market. It's a way for the bulls and the bears. They're the sign painters out there. It's the way for them to be able to communicate to us what's going on. It's a way to be able to identify areas of support and resistance. They have a lot of meaning. But you don't just trade off of candlesticks. If we're that easy, we won't have to worry about any of these other indicators out here. And, you know, the most powerful bullish candle, you'd have to say, other than a it's really not a Japanese candlestick, it would be your island top, your island bottom reversals out here. But as the most powerful single reversal candle is the hammer candle. And, you know, evening star patterns that we're taking a look at, for example, on the ES, on the Dow out there, you know, take 3 sessions to form. What's nice with a hammer candle is it forms on 1 session, helps you really identify a support level, tells you when price falls and breaks the low of a hammer candle, that price is going to move down to the next logical area, which is likely going to be the next swing point. That's why you want to be able to understand those major intersections. Now, in the case here of the NASDAQ futures, what we can see is that it formed a now, the way that you really use these candlesticks is you combine them with the different trading patterns that you might use out there. Could be A to B equals CD patterns. It might be trend lines, channel lines, whatever it might you might use. You could use it with Bollinger Bands, whatever it is you might go ahead and use it with. That's how you use these things. Now, with regard to the hurdle inside of the NASDAQ futures out here, the hurdle inside the NASDAQ futures becomes really the trading session from February 26th out here. And the high of that candle, that was a bearish engulfing candle. You can see it engulfed the entire body of the prior session out here. The actual high of that now becomes the resistance level. And that resistance level held up until so far this morning. Now, the day is not over. So the key here for the NASDAQ composite, the key level, the key hurdle is 3702.25. You're trading at 3709.25 right now. You get a close above that. That says, okay, that could become your support level now. And that, again, 3702.25. So that is, in essence, we can say the NASDAQ has cleared, thus far, has cleared its resistance area. Let's go take a look at the Russell 2000 out here. We'll take a look at the current contract. We're taking a look at the daily charts. Now, I've got a slight delay, a 10-minute delay here inside of my feed on the Russell 2000. If we were to take a look at any kind of resistance out here, what we have to do is we have to come all the way back out. Well, the last time you saw resistance in this move up was on February 19th. You had a little bear sash candle out here that was immediately raised on the very following session out here. If we now take a look at the resistance level, actually it's above that resistance level, and that was a bearish engulfing candle on January 23rd. And that high out here was 1181.30. You're trading out right now at about 1187.60. So that's the key number out here. You get above that. And the Russell 2000 really has nothing in its way to continue moving higher out here. Buyers most certainly in control, even with yesterday's action out here using the Rhodes Momentum Indicator system out here and the signals. Even with yesterday's move lower, the Russell 2000 moved down into a logical area and tested a logical area of support. And the Bears really never were able to totally take control of the trading session out here. Now, let's go take a look at Goldilocks. Let's use the same thing out here. Let's use the Rhodes Momentum Indicators here. We'll take a look at gold. We'll take a look at silver. And then I'll go back and show the other patterns that we have out here. Here is the gold contract right now. Now, what the gold contract is doing, it's in the process of forming one of these price relative strength divergent patterns here on the daily chart out here, in that it has made a higher high. It's done it on less relative strength. We do not have a reversal signal here as of yet. However, you've got the bearish engulfing candle that would form if we were to see a close today below 1332.40. You're only at 1334.40 as we speak right now. That would be a bearish reversal signal out here. No, look, in order to truly see some type of pullback or retracement in the market, you're going to need to see gold get below 13. We'll call it 1322 as we speak here right now. Might be just a slight hair underneath that. Then where is it that Goldilocks could pull back to? I'd come all the way back here to the, from a candlestick standpoint, I'd come all the way back here to the January 27th high, that little bearish engulfing candle out here. That price level's at 1279.80. So if we see a bearish engulfing candle, that would be a logical area for us to see gold pull back to. If we take a look at silver here, if we take a look at high-ho silver, before we go into this break here, silver, not anywhere near as strong as gold. Maybe silver pulls gold a bit lower. 877-927-6648. Be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow up 175 points, trading out at 16,343. S&P up 20, trading at 1865 and change. Composite up 55 points, trading at 43.31. Russell 2000 lead the charge. The upside up 19 points, trading out at 11.95. A bit of change. Apple up $3, trading at 5.30.68. Microsoft up big, 1.5%, up 56 pennies. Google up $7 and change. Cisco up 16 pennies. Intel up 19 cents. Leading the charge to the upside is VIP Shop Holdings. VIPS is the ticker symbol. I believe they were out with earnings here yesterday. Net income $25 million versus $6.3. That's a nice beat there. And revenues here $651 million versus $299. So that's a big beat. Up 23%, up $30 right now. Google up $9. Tesla up $7 and change. Splunk up $4. Kiwi PLC, QIWI, that's up 10% here this morning. LinkedIn up about $4. You've got Guidewire Software, GWRE, up 5.5%. EPAM Systems, I think it was down pretty big yesterday, up at 9%. To the downside here, you've got, let's see here, let me find something other than a direction share or an iShare out here. Boy, I've got to go all the way back to the Ireland Bank, IRE, taking in the shorts here this morning. It is down about 7.5% off $1.58. WebMD off $1.57, down about 3%. Otherwise, on my screen here, nothing but the direction or pro shares. Let's begin by taking a look at a couple of these stocks here that are moving. Let's take a look at those moving to the upside here right now. So leading the charge, you got VIPS is the ticker symbol. It's VIP Shop Holdings. It is up, it's trading down at 155, up about 22% out here. In VIP Shop Holdings, they operate online discount retailer for various brands in the People's Republic of China out here. This thing is at all-time highs, I believe. Let me pull this back out of here. Boy, talk about a rocket ship. If you come off back to June 24, 2013, not even a year ago, right? Let me try to go back a year ago. Let's go back to February. Let's go back to, I know we're in March. Let's go to March. Let's see here. March the 1st. March the 1st, this equity was trading at $25. You're at $158 right now. Talk about a rocket ship out here. No way to tell where this thing is going to. Today it is trying to head to the moon. It's got some good volume behind it as well, 544,000 shares out there. Let's take a look at Google, see where Google is doing. Let me go back to some core stocks. In fact, we'll take a look at some of the core holdings out here and see what's going on, see what Google is trading into. Google right now trading at 12.1082. Let's see here. What is Google doing here? It's going to try to, it's already trading into, it's rejected it so far, its swing point high from February 26th. Now, you've got 1.9 million shares out there. We're not going to take a look at volume here today, only 152,000 shares. But if it can close inside 1213.76 today, it would say it wants to go test the 1228.88. If it can close inside there with more than 1.9 million shares, that would be bullish. Still needs to take out and test the high of 1228.88. Thus far, rejecting the price as we speak here this morning. Let's take a look at Apple. Haven't looked at an Apple chart here for a while. Let's go see what pattern it is that we may have forming out here. In the case of Apple, let's get rid of the A to B equals CD pattern. Let's get rid of all of it. We can delete it, and we can always add it back in here. So if we take a look at what Apple has done thus far, what Apple has done, it's giving you an island reversal pattern here at the bottom. So that's interesting. Let me just refresh, make sure I've got everything in place out here. So if we take a look at what Apple has done, there we go. Okay, I'm coming back to so we know what Apple did here was a gap down with some big volume, 38 million shares on January 28th. So it gaps down with 38 million shares, travels a bit lower, completes an A to B equals CD pattern. If we take a look at what that pattern here looks like, it would be right there, 1 to 1.618, A to B equals CD. That projection would have been 492.03. It actually got down to 501.53. So it completes that pattern. And for those of you that own the art of timing the trade out there, you know when the market does a 1 to 1.618, A to B equals CD, it's oftentimes going to do something different. Now, as it was making that pattern, it was probably, if we take a look at the relative strength indicator out here, let's go take a look at that. It certainly was also into the oversold condition. Now, we've seen a bounce, and we've seen a bounce here. It's all been on light volume, no question about it. But what's, I think, more important is the mere fact that if we take a look at what Apple did here on the trading session of February 7th, we see a nice gap up. And that gap up, the prior session high was 513.50. In fact, if we go back to the higher high out here from February 5th, that was at 515.28. Well, the low of that trading session on February 7th was 517.38. Formed a bit of a gap out here. And when it formed that gap, that's what created the island. Let me get rid of these moving averages out here. Let me just clean this up just a tad. I'll make it a little bit easier for you to see. Let me get rid of the consolidation box up at the top. Let's get rid of this old ABCD. Let's get rid of that, too. Now we're going to clean it up. It's just a little bit easier to visually see here on the screen. And so when we take a look at the most bullish pattern, I mentioned it earlier when we take a look at reversal candles and Japanese candlestick charting. Now, this is not a Japanese candlestick, but let's go draw in the circle here. And this is important both from a bullish and a bearish standpoint out here. Let me just draw it over a little bit further, and I'll move it back just a tad out here. So here is the little island that formed. This is very bullish, a very bullish candle configuration. We can see that island, even though the boat tried to get back here. We saw a low on February 26th of 515.60. Still has not breached this island whatsoever. So this is bullish, and this could be forming an A to B equals CD to the upside. We have not seen, in fact, you had a little bullish engulfing candle that occurred right here on February 27th. So you've got the bulls really trying to defend Apple out here. Now, because this is also such a bullish pattern, if in fact the lows get taken out of that island, that's a January 31st low, 493.55, that would be very bearish out here. So you do have the possibility that Apple is trying to actually form an A to B equals CD to the upside out here. In order to do that, you're going to need to see volume pick up, mostly as it comes into the B point, which would be your February 18th swing, which has 9.3 million shares, and that price high is 551.19. So you have a very bullish pattern inside of Apple as we speak at the moment. So that's interesting because I had not noticed that in the past, or if I did notice it, I didn't remember it. So we went and took a look at the charts out here. If we take a look at Visa, let's go look at Visa because that's the number one holding inside of the Dow. Let's go see what it is doing. Now, yesterday pulled back with about 4 million shares. Let me see what it was pulling back into. This thing, Visa, was pulling back into, and it was testing here. And even though it had this nice big breakout, we can see the price had moved back below that area. What Visa needs to do, in order for Visa to truly turn bullish here, what Visa's got is a little gap down. This gap down is from January 23rd. This is going to be important because it's the number one weighting inside of the Dow out here. So if you take a look at the trading session from January 23rd, the low out there is 227.66, and we can see the gap down was with no big volume or anything like that. Just 4 million shares. And that's really not as important. The gaps are your friends, and they tell you quite a bit about what a stock, what an equity, what an index, what a market is doing out here. Now, in the case of Visa, we can see that the first time back up to test that gap was February 18th. And that's got up there with 3.3 million shares. It tested it the following day, was not able to get above that resistance level. It's tested at 1, so it's really at 1, 2, 3, 4, 5, 6. So it's tested at 6 sessions here since the time period of February 18th. And each time, so that is a real strong area of resistance. Let's go ahead and let's make that an even thicker line. That is resistance. If Visa gets above there, old resistance, because that's been such strong resistance, really should become new support out here. Until that's the area that Visa is trying to deal with. Now, yesterday on its pullback out here was pulling back with some volume. Visa could be setting up an A to B equals CD to the downside, because if we take a look at right now, let's go take a look at what that retracement was as it was coming into that little gap down area. Was that a 0.618 retracement? Yeah, it was just above a 0.618 retracement. So it's possible here that what Visa is doing is setting up an A to B equals CD to the downside. If it is, this is what it would look like. It would take us down into about the 204 to 197 area out here. I would have to say the 197 takes us right back into this high volume bar. That's from December 11th, where it did 10 million shares out there. It should be able to find good support right around 201 to 207.91. That is if it continues to move lower out here. So that is on Visa. Let's go see what IBM is doing out here. IBM, we'll take a look at IBM and ExxonMobil. So good to take a look at, because these are key charts either with inside indexes or certainly with inside some of the S&P 500 sectors out here. So as we take a look at IBM, make sure, this is IBM gapping up here this morning. And what IBM, just as we took a look at Visa, IBM is now going to try to take on, this will be the first day that IBM could try to take on the resistance level of its gap down, which is the January 21st low. So resistance in IBM could be 186.79. Has not tested it. The volume there on that gap down pretty substantial, 13 million shares to the downside. That's really the benchmark. We're using the actual trading session from January 22nd. So we should expect to see, now if IBM can close inside that swing point, number one, you would close the gap. That means it close above 186.79. And if it can do it with more than 11 million shares, that would actually be bullish out there with inside of IBM. Plus, it would be taking out a swing point with volume out here. And it doesn't really matter what you use out here. There's nothing. There's not only about 4 and 5 million shares out here. So that's what's going on inside of IBM. What we know about IBM, it's got that nice little 0.786 Gartley sell pattern that has most definitely worked. If that gets taken out, that meaning when I say get taken out, a close above 190.35. I don't mean 190.36. I mean somewhere well above 190. Let's call it 191, 192. Let's call it 192, huh? If you take a look at 192 out there, that old 0.786 Gartley sell turns into a butterfly, but we'll take things one day, one moment at a time. That's what's going on inside of IBM. Let's take a look at ExxonMobil out here. ExxonMobil right now trading out at 96.04. It, too, has a resistance level. That resistance level now, it hasn't really tested it here just yet. That's caused by the gap down. It also has on January 23rd, 15 million shares to the downside. Now, it's pushing into that with volume on February 24th, 16 million shares. And right now it's just really kind of consolidating at this area out here. But what we could be seeing take place, just like when we took a look at Visa out here, you could be seeing the formation of an A to B equals CD down inside of ExxonMobil. And if we are, it would look something like this and take you down to about the $85 level. 85 takes you all the way back into the bottom of the consolidation, and that is a nice 7-point consolidation. And that is probably where Mr. Buffett began buying his position inside of ExxonMobil, right around the price point of about $84 out here. So as long as it can hold that old consolidation at $84 area, that would be really your buy inside, if in fact it's pulling back with some lighter volume out here. So that's on ExxonMobil. A request to go take a look. Second dust ball. What are we going to do out here? I can't keep swallowing dust balls. Pretty soon I'm going to turn into a cat or something out here. We certainly don't want that. In any event, I got to talk to the maid. Oh, that's me. I guess we got a problem out here. Let's go take a look at the SPY, the SPY. Let me find the ETFs out here at a request to go take a look at that. Let's go see what's going on inside of the SPY. Question was, has it taken out its swing point high? And that is a question referring to the February 28th session. 187.15 is the number. It's got 150 million shares out there. It has not taken it out. I mean, it has not gotten above that. The intra-session high so far today, 187.08. Gapping up. So that is a nice strong formation. Key is going to be volume today. You got 19 million shares thus far. We have been trading here for about 18 minutes a time. If it can close above 187.15 and do with more than 150 million shares, that would be very bullish out here. What would that say? That would say that you would see the SPY move up to the next expansion level. That expansion level, well, first it needs to clear 187.99. That is the 1.272 expansion of its last set of significant swing points, that being the high of January 15th, out at 184.94, down to the low out here on February 5th, out at 173.71 out there. That's what's going on inside of the SPY. We can go ahead. We can take a look at what's going on inside the, let's look and see what's going on. Oh, the IWM. Take a look at this. Man. Talk about getting some strength out here. IWM has taken out its high, that high being from Friday, 118.71. You're at 119.16. Volume on that session was 47 million shares. Today, it's already done 10 million shares. Man, the IWM has got some juice, and it's taken out, one of the most bearish patterns out here, that 3 drive to a top. Something to think about. 877-927-6648. Be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Is the ticker symbol. Let's go check it out with the Rhodes Momentum Indicator charts out here. Now, the first chart that I'm going to put up on the screen here, what's nice is that always great to be able to take a look at charts on multiple time frames. Here, the upper portion, the upper half of the chart is the weekly time frame here for AutoZone. AZO is the ticker symbol. The bottom half is the daily chart. Now, if we take a look at AutoZone, the colors that you're looking at on my screen here, yellow is a cautionary zone. Just really means you want to certainly be taking a look at your stops, adjusting your stop levels. Blue, light blue, is super bullish mode out here. And in this case, AutoZone went into the super bullish mode back in October of 2013. And buyers have been in control, quite frankly, on a weekly chart. Let me pull this back here. See when the last green signal formed. So the last time that sellers had any kind of control on a weekly chart is what I'm referring to now. On a weekly chart inside of AutoZone takes you back to April 19th, 2013. So for nearly a year out here, and it may be just in fact that, all we've seen are these red roses. How about that? Red roads signals out here, and that tells you that the buyers have been in control on a weekly chart out here. So if we take a look at any kind of potential reversal signals, anything along those lines out here, you'd have to really come back to, on the daily chart, you'd come back to the trading session from February 17th out here. That's on the daily charts. That's on the daily and the weekly charts. If I were to try to put up a 120-minute chart, let's go take a look at an intraday time frame. And that's really what you would use the 120-minute time frame charts for in trading. Something like that is looking for some entry points. So AZO is the ticker symbol around here, and you'd want to know what it is you're looking for from a buy point standpoint. All right, now the Dow's up 192 while this chart is trying to populate itself out here. So come on, baby, populate for me. Don't make me you can see here on the 120-minute chart for gold, that's what was on the screen out there. So in the case of AutoZone, showing a little bit of on the 120-minute chart here, a little bearish engulfing candle, but I'm not, it's really just consolidating sideways. All that this has been doing here since the time frame. Let me get my crosshair up here. You've seen a consolidation sideways that really began back, looks like around February the 7th, right around 1:30 or so in the afternoon. So at this stage here for AutoZone, daily, weekly, even on the 120-minute chart here, everything looks pretty darn good. PDG out here. All right, so what is it we're going to be paying attention to today? Well, number one, if we take a look, let's go take a look at the VIX index. We haven't done that, so let's go take a look at that. If it's traveling below the 50-day exponential moving average, which it is, the 50-day exponential moving average is 1478. You're at 1425 right now. It tells you liquidity is plentiful in the marketplace. So that is bullish. Inside the New York Stock Exchange yesterday, even with the push lower, New York Stock Exchange still remains in bullish mode out here. Remember, it was the New York Stock Exchange last week that closed over the 2007 highs. That's a 6,000-point consolidation breakout. And what we said yesterday was about the most bullish thing that you could see is actually a push down. And if the close of the month of March here would be a close above that 10,387 level. There was not enough movement, not enough net declining issues yesterday in order to push the oscillators, the price oscillator, the volume oscillator below zero. So bulls still have the upper hand when it comes to the wider swath of the market, the NYSE. Folks, it is Terrific Tuesday. Thanks so much for joining me this morning. Have a great day. I look forward to seeing you first thing tomorrow, or perhaps in about 10 minutes. Take care, folks.
Look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.